is Simon with, well, it's not recording. There we go. This is Simon with toughtrader.com doing a afternoon trade review of this morning's trade plan and how we executed and what trade setups we're specifically looking for while we're trading to be able to capture the maximum risk reward, right? That's really the focus of how this set up and comparing what we were looking at pre-market to what we got during the day and how we executed that, right? So let me think this through carefully so I keep it concise and short. Before I get started, important notice, past performance is not indicative of future results. Trading futures is risky. You can lose a lot of money, right? Please have a risk trade plan and execute that plan well, right? Don't blow yourself up. And then let's see if I have any other thought process behind that. This is for educational purposes only, and I'm a bit on the tired side, but I think it's important what we had today, so I want to go over it, review it, so that everyone benefits. So let's talk about NQ first, right? So this morning we had two key areas. We had a scalp location, which I marked with an RP. That's my own little note. That meant that's where I expected to get resistance and responsive sellers or responsive buyers, depending on which way we came out of this location, right? And you can see right out of the gate, I didn't know whether we would get there, but if we got there, I was willing to lose money. Now, I want to go over with you guys what I would have covered. My stop had to be up in here, up behind here, to make this trade work, but I would have stopped this. See how this bar closed above and this bar didn't? Really small, excuse me, this bar closed above and this bar didn't, right? So see how we pushed right into my exact scalp location, 60.8175, right? I was at 60.8150, and I did not want to see it close above. So if I had taken this trade, right, and I loaded in on the scalp and it closed like this, I would have lost, right, which I think is an important thing to realize. My stop would have been right there at 60.85 3/4, which means I would have lost, let's call it 4 points, right? $80 a contract. And I would have covered this if this would have ended up looking like this. I wouldn't have gone, well, maybe it'll work, maybe it'll roll over. For my scalping locations, that's it. It's literally got to be this delineated, right? And that is so, because when I get it right, look at my risk reward to the downside versus trying to guesstimate whether this will work and then taking a beating, I guess is a good way to put it. Taking a beating while I'm trying to figure out if it's going to run and end up doing one of these instead of rolling over. So my risk was, let's call it 3 to 5 points, and on the table was, let's see, 79, 69, 63, roughly 15 to 20 points. To me, that's good. That's good risk reward, and I'll take that pretty much every single time, right? Without any hesitancy whatsoever. So wanted to make sure that everyone understood that trade. That's what those little white dotted lines are specific locations I'm looking to trade. They don't always work, but the idea is that I get very controlled access into that area. So that's new in the charts, and I may just start laying out a separate set of charts with scalp locations only. There you go, Peter. Look at that roll down from 91.50, right? That was a pretty key location right there. It was a pretty important area. So, and that was not based on anything I did last night. That was based on this work on this structure up here to the left. That was a retest. If you can get underneath this build now, you pretty much have them to the downside for profit taking. We'll set to see how it goes for the end of the day, but a logical place for profit taking on that, right, would be a move into 60.75, 60.70 on the 50-60 back. At least that would be my personal thought process on that, would be that you're ripe to have them catch the other side of that trade now. That exhausted the move to the upside, right? And now you want to see if they can avoid punching a new high, right? So what you don't know here is that whether they're going to come and test the volume point of control. Anyways, going back to NQ. So that was my first trade of the day, right? So that trade is more aggressive. It requires a comfort level right out of the gate. It requires a comfort level to be able to say, hey, I'm just going to sit here and absorb getting run over early in the day. And a lot of people cannot get over just taking the insta stop and then going, even if it's 3 points, or like I'm already down on the day and it's 1 minute or 2 minutes or 10 minutes into the day, and it's very frustrating. So you have to be honest with yourself and go grade yourself and go, I'm an aggressive trader, I'm cool with getting stopped. Or an aggressive trader means just that. I can get stopped, keep my process down, and go on to my next trade, right? So you know you're one stop and you're done. Don't take that trade. Pretty simple, right? Let the opening rotations the hardest time because you get the biggest flood of volume in that first couple of minutes. So now let's talk about this push to the downside on NQ. I've been mentioning a lot about it would really help traders out to identify what your highest odds setups are. So I'm going to pull over to the other trade chart really quick. Okay. So I can effectively have two charts rolling at the same time. Okay, this is an NQ. Let's erase this. Okay. So very simple analysis, right? This was my last. Let's come over here. Now I got too little. Let's go up on a little bit higher on the time frame. There we go. This is my last swing low over here to the left. Right? Okay. So simple rule of trading, right? I have to break my last major swing low in order to get a bearish move to the downside, right? That's just 101, right? We have not broken it, and not only that, but this goes back just to the 19th right here, and we failed yesterday to trade below, or this morning, if I'm correct. That's correct because we switched days there. They ran in. I need some spacing there. This morning or yesterday, we failed to trade below the swing low here. So on NQ, right, who's in control? Well, you have overhead resistance sitting right over here. That's where your big overhead resistance is. You can see we traded sideways. It's where your volume build is. When we get up into this area, the first thing we know is we can expect volume to slow down. In order to get bearish, we know we have to break this swing low and now this swing low over here to the left. So the analysis of what we were looking for is I'm expecting, I believe this is what I said. I said I'm expecting out of early buys, responses back to the downside, and then I'll start working the trade to the long side. I'm pretty sure, guys come back at me if I didn't say this, members in the room, but guys, I said my focus is not on the short side, but to flip to the long side of the trade, particularly this morning. What usually happens in these situations is these become one-day wonders, and we get these constant feeds back up. And if you'll notice, just like the argument of higher highs and higher lows, we've started to come in with lower highs on the top side on a higher time frame, right? And then the next thing you want to do is from swing high, your last swing, to your swing low. Excuse me. I'm going to do that. Wish I would have done that. There we go. So from the point where we broke down yesterday morning to this morning, you can see we've come right into the 50 retrace. And really, if you're a bear, you don't want to see it close back behind the 62 retrace, and this pretty well defines your area of risk on this trade. And you're really hoping the sellers come back in, and really your goal now is to trade it box to box on the 50 retraces, right? It makes sense that we come back over here just like on this day when we pushed up, right? If you look, we traded here, and if you look from the swing high, see how that traded from where we opened, pushed the 50, pushed back to the 50, and now this becomes the decision point, pretty much the same location. And the clue there where I'd get concerned if I were long or I was aggressive to the short side, I'd get very concerned if we closed behind the 62 retrace. Would make me very, very worried. Would be a good word to put in there, right? Would be very worried if we closed behind that 62 retrace for the same reason that we had yesterday. When you pull up and you get behind the 62 retrace over here, you can see that pushed us into that long liquidation scenario. Again, these are 30-minute bars, right? So now let's go back to this morning. How do we figure out the trap, right? So let's go talk about that. So we're going to clear this. Okay. Peter, nice job on your short, by the way. That was excellent. Hopefully, I hope it rolls down for you hard. Okay. So when we started off this morning, right, the first thing that you'll notice is from this leg down to this leg down, so there's multiple ways to look at it, right? But from this last leg, first we came right into the 50-60 of this last leg. This is an aggressive way to draw a 50-60 retrace, and I just use it for reference. I don't use it as an automatic trade, right? Because you could have drawn it the other way as well, like this, and it got straight run over. And you'll notice what's interesting about that is they use the backside of those 50-60s as resistance, right? But I prefer the more stable way of looking at it, which in my eyes is using volume build. Okay, so let's go get out of this. But what I mean by that is it's not automatic. In other words, I had a reason for wanting to be short right here this morning, and it wasn't the 50-60. Just like I had a reason for not wanting to be long here, but being long over here at 62.50, which was our long, right? And there was a couple of elements that went into that, and I want to make sure that I explain them in as plain in English. And I had such a challenge doing that, so I'm going to work on it, right? So let's clear the chart one more time. Okay, so when we get down into this area, I'm going to lift it up. First of all, look at the size of the rotation, right? In any market, one of the most key elements that you can have to your advantage is what's the size of a big rotation. So in NQ, 30 points, 20 to 30 points tends to be our key areas, right? So from 60, 80, 150, if I go down, and I mentioned last night on the Twitter stream, right? I mentioned last night on the Twitter stream that the 20-point rotation, that 10-point rotations in ES and 20-point rotations 20 to 30 on NQ, those are standard, right? So from 81, that brings us down to 61. 20-point rotation down, and notice we start to find, and then here's the 30 would be located down here at 51. And this really becomes kind of our sweet spot just from a reference point by itself, right? Nothing stopping it from sweeping down to 51. But we also know another thing. If we come here and we add the analysis of volume, just volume by time, okay, we can see yesterday that as we were pushing into the low, see how volume expanded as we were pushing down into the low, and we know that we swept this area. So unless you get highly technical about it, and you can say, well, how do we know if someone's panicked or not panicked? Well, when we get to the low of the day and it goes in a straight line for almost an hour to the downside, and we make lower lows and lower highs, and this lower lows, lower highs rolls into straight down, right? And then we close near the low of the day. In my book, that's kind of panicky, right? So we know a couple things about this area that you should have had written out in your journal, right? And the first one is that this area here represents all the panickers. If you get above those guys, right? If you get above those guys, where should we push? Even without doing any advanced technical analysis, right? You can go, this is the last structure from which we broke down, and I would expect rejection from that area, right? And if you look at this process without going any deeper into it, right? You can see that we pressed below the panickers right here, right? So I'm narrating when I'm trading. Okay, I'm telling myself two stories. The first story I'm asking myself is, what is the price action that's going on right now? But the story I tell myself before I get to the market is, where are my key levels, right? And what do those key levels represent? So this one I would have labeled the panicker crew, right? These guys are all panicky. These guys were actually trying to hold up the market. They were pretty strong. If you notice, they held. There was no wild, wicked bars, and they just all gave it up, right? They couldn't get the reverse. I'd list these guys as relatively strong. I'd list these guys as relatively weak, right? And also panicking. So what do panicky people do if you think about just human nature anyways, right? What's the natural response to someone who's panicky is to overreact in both ways, right? So see, these guys stayed pretty calm and they just long liquidated, but by the time they got down here, these guys were screaming at the top of the lungs. So then this morning we popped up. These guys were pretty optimistic, right? I was willing to short this, and I didn't want to close above. Again, that would have been my cover bar right there, assuming it would have looked the same, which you can never know, but I assume this would have been my cover bar right here. We pushed down. I'm covered into the top of this structure over here because I didn't know that we were going to push below, and we did not in ES. Now I get additional piece of information. Again, this is without doing any volume profile work, right? And I get that additional piece of information that I have my biggest push into the low. See how much bigger the volume was here? So you could say a couple things. Well, Simon, that was in the first half hour. That's true. But usually in the first half hour, the first bar of the print of the day is usually the highest volume bar of the day. So this is uncharacteristic. It's an outlier, right? It's uncharacteristic of the market in general. Secondly, look how much volume was here versus how much volume went off here. Now I can tell you cumulatively probably more volume went off here, but in a concentrated time period, more volume went off in this one little area, right? So what does that, I guess the question is, what does that mean to me, right? Well, I'll tell you what that means to me. What that means to me is they made a huge effort to push down. Not only that, on the biggest bar down, volume-wise, it was smaller than the prior bar, which had less volume. So they got less distance per effort put in, number one. Number two, they failed to manage to get a close below the low print bar from yesterday afternoon, where we know for a fact that panickers were already involved in the market, right? And number three, on subsequent pushes lower, they were unable to get lower. Now I'm going to post this to the public, and I've already drawn it, so I'm not going to go through the process of drawing the volume profile. I consider that pretty proprietary for the way that I do it, so I don't want to share it with the general public. But even without the volume draws that I do in the room, these pieces alone, right? And then what's the last piece? We get the engulfing bar at the low, right? Which I've mentioned numerous times. When you get to the low and you get the biggest up bar, so we can go and look for examples of where that's occurred, right? And we have some great examples recently. Just 2 days ago, right? We push down, we get a very similar build to what we had today. We don't get the big volume push again. That was what was so unique. You should have that written down somewhere. Look, volume usually, the highest volume of the day usually comes off at the open. So if you're an hour or 30 minutes or 15 minutes in, you get the highest volume bar of the day, you should be going, hey, that's different, right? That probably should be drawing my attention right there, right? Number two, you see the engulfing bar, right? Remember, we were long all the way through this, and the tip of the hat to Ron caught this entire run off this bar right here. And he caught this entire move almost to the upside, almost the entire move. I think he dumped it right here, but nonetheless, it was an impressive trade to the upside. So we have the same characteristics, right? Panic, attempts to push lower, repeated fail attempts, engulfing bar, and push up. These things can be repeated, right? Even without the in-depth analysis that I like to do on, even with the in-depth analysis that I like to do on, and by the way, you're getting a nice push down there, Peter, on your options down to 86.50. That 91.50 was really a nice zeroed in location. Brian, I just showed that to you a couple minutes ago too, right? So hopefully you saw that and made notes about the backside over there. So if we go back a couple more days, right, now you'll notice sometimes we get the reversals back up and we don't get that pattern of the engulfing bar through here. And that's okay. See, this is where when I'm trying to teach people how to trade, right, it doesn't matter that this pattern didn't repeat here, right? I promise you, if you look at this setup right here and you go back through the history of charts and you say all I trade is that setup, this is pretty close to that setup, right? This isn't. You don't get that setup here. It does reverse, right? But what I find is instead of people going, hey, I'm looking for this particular setup, let's say this is all your, we roll down, we get a good rotation, you get to the engulfing bar, and I go long. Let's say that's the entire A, B, C, D step of your process, right? What they do is they go, well, that's not good enough for me. I can't wait around for that to show up, right? And they try to trade everything. But the guy who sticks to this pattern right here, as simple as this is, without any more in-depth knowledge. So if you look what happened here, this is also pretty interesting, right? Swing low, swing high. See how that held the 50-60? Additional information. Engulfing candle. Push down, right? Couldn't break behind the 62 retrace, attempted to, and then they push out. That's a nice trade right there from that area. Even if you took it all the way up here, it's still 61.12, almost to 61.22, and we closed out at 61.26. And the point behind this is that these trades are showing opportunity. Again, it's sideways consolidation. We had the same pattern developing for months in ES until it finally broke when we went up into the straight up pattern. But if you focused on this pattern, there would be some failures. There would be some losses. There's no question about it, right? Notice through here, you don't get the engulfing pattern. Notice here, you don't get the engulfing pattern. But if I keep going back far enough, right, I will find pushes down. Again, notice I don't get the engulfing pattern. So what the feedback I get from traders is, it's not that there's not a trade here, but they go, well, I don't want to sit there all day and not get a setup, right? But all the conditions have to come right in order to get that setup, right? And so, don't know if I'm communicating well here, so I want to take a step back. My point is, going into today, how did we know? So the way that we knew, and the reason why I was so vocal about the 6250 was, first of all, there's a huge volume build in here at 6250. They pressed down very hard. We backside tested. We failed to show the inability to get below the low. And remember, we're already long before we get this engulfing bar. This engulfing bar was the confirmation, and I said the upside target was right in, I believe, I had my upside target is 77. Then Ron had 83. And then my final target was somewhere at the 50-60, which is where I think we are right now, was the 50-60 retrace up at 92. I believe was what I said was my final target to the upside. Again, guys, please correct me if I've misspoken, but I'm pretty sure that's how I laid out that trade. If you'll repeat that process over and over, that thought process, the panic out, the engulfing candle, the inability to get back below the low, there are a ton of winning trades hidden in the market. And Peter, I would be very much, if I were trading options, which I'm not right now, very much wanting to load up into that position, because that's an easy, well-defined out risk. And then someone showed me the other day, well, what happens if that breaks? So we should go look. There is a place where that breaks. Although it's not very easy to find. Let's see if we can find it. Okay, so let's just do the whole process a little bit differently, right? Let's say this was the same setup, right? We pushed really hard here. This is going back to the 10th of this month. You'll see we had a beautiful roll to the downside, right? We pushed into where they panicked the day before, right? You can see a very similar pattern the day before. They panicked, they pushed in, and they reversed out. So let's play pretend for just a minute. Let's say this turned out to be an engulfing candle, or this was the engulfing candle I used. It obviously didn't set up right on the back end, because you don't get the sideways consolidation that we got this morning, right? But let's say this was my entry right here, and let's pretend, however I did it, that I entered at 60.56, right? There's really not a setup here, but that's fine. We'll pretend there's a setup. The setup's actually on the back side of this test right here is the setup. So let's say, however we do it, we enter 60.56. Actually, if I think back to it now, I was long 60.56 on the back side of this. So we roll from 60.56 up to 60.64. I was long because there was a volume build right at the bottom of this bar. So when we backside tested into the backside of this bar, that's where I took the long. That's why I remember it, and I got stopped on the trade. So from 60.56, which we backside test, I push all the way up into 60.64. So let's talk about that for a second. Now, I would have been going for an opportunity to U-turn this thing back up, right? But even without this U-turn back up, when I get to 60.56 and I get to 60.64, that's 8 points. It's $160 a contract, right? In most people's books, that's a good trade, right? I'll take $160 all day long. At that point, you have a choice. Bring your stop up to swing low, right? Which means on your balance, after you've taken your 8 points, right, you would have gotten stopped on this bar right here. So that's 60.52. The entry was 60.56. You ended up burning 4 points, and you got 8 points on the first part of your trade, hopefully, right? Secondly, even if I stopped on this bar, which I assure you I would have stopped, even if I had a generous stop behind, that would have stopped me out right there. That still would have put my stop at 60.48 from 60.56, which is still 8 points better than 10 points, right? And again, remember, my RR is very favorable here, right? And then I'm going to start this whole process over again. Now, if you'll notice, why would I start that whole process over again? And I'll tell you the reason why I would start that whole process over. Because look at the stretch that we're on here. And again, I haven't done any charting on this. I'm just looking at this naked, right? 60.88, 60.68, 60, I wanted 60.88, that'd be 60.78, 60, oh, excuse me, 60.68, wow, dyslexic person, 60.58, Again, back another reason for that to hold, right? And then if I add 10 more points from that 60.58, that's going to bring me down to 60.48. Notice that from each of those levels, see how the algos try to respond to that? Because they know that the NQ is on that rotation. See how you get wicks at each of those locations or attempts to hold? And it's because that's 20, 30, 40 points rotation. And once we get past 20, they're going to try to find a way to reverse it, right? They press down here, right? See how they press down here and fail to close below this bar? And then we get, let's call this an engulfing candle. It's not a perfect engulfing candle, but let's call it an engulfing candle. Just like I started the process over here, I start the process again over here, but this time I end up getting a rotation from 60.47, right? I roll back up to my next structure, which is my logical first target, right? And so it's from 60.47, which would have been the best fill I could have gotten if I was waiting for this, right? 60.47, that rolls me up to 60.57, 10 points, $200 a contract. I can now move my stop to the low of the day or to break even, either one. And now I'm going to see if I can't push. And my ultimate goal will be to get this to V-shape, right? And even though it doesn't V-shape all the way back, it does get me from 60.47 all the way back to 60.68. So even if I had net lost money here and I redraw this process, restart this process right here, right? I am still in good shape to make money for the rest of the day, and I'm working the stretches versus working 5, 6, 10 point stretches. I'm working 20, 30, 50 point stretches, and I'm looking for structure to come in. Does that make sense, guys? Does that show how I still could have taken the stop, and as long as I stayed to process, still end up having a very nice day? Either this was profitable because I moved up to net break even, or it was a slight loss. Either way you look at it, you still end up with a win-win, and you don't end up going, well, I'm just going to hold infinitely and let it roll against me. You go and start that process over. Day trading isn't about being more active. Day trading is about being more precise, and you're still getting paid so nicely, Pete. That was a freaking great trade. I'm so impressed with that options trade. I mean, literally, we've rolled down almost 10 points since we started this conversation on NQ, right? So, and I thought that 91.50 was very, very important. Guys, the ones that I'm coaching, you'll know what I'm talking about if you'll go look at that bar right there. This bar became very, very important, and we tested right up to it and rolled right down. Picture perfect setup right there for a roll to the downside. Exhaustion on the upside, and look, that's the biggest volume of the afternoon. Now we're trapped back in. If it can't get back above 60.88, the logical location, again, would be a test back to the 50.60 if we can stretch there by the end of the day back into this location. So that's how the trade's set up. I'm encouraging you all the time. There are scalp trades. This trade was a little bit more cowboy than most people need to be trading, right? I was very aggressive with that, and I got lucky. That's great. But this sure wasn't. This was very plotted out and can be and this effort can be repeated. Not every day, because you don't get it every day. But I would become a specialist in understanding what that looks like, because it shows up in multiple places and in multiple indices and in multiple products, and not always, but almost always produces a fantastic result. Any questions, guys? That was my thinking this morning. I think I followed it through linearly from where we were looking to trade. We were looking for prices down. We were not bearish today. No one should have gotten run over. I made one error shorting today. Okay. Guys, I'm totally wiped out, so that's going to be it for the day. Please keep your focus on what your best setups look like, not just from an individual bar stand-up point, but also the whole structure. Trading's gotten more challenging because people have gotten more and more information and they're better at it. What you want to constantly be asking is, who is trapped, where are they trapped, and where are they likely to push to, right? And by the way, the only piece of structure here, right, is this right here. See that whole big piece of structure? So getting tested down into here. Now whether they do it today, tonight, tomorrow morning, but this structure usually likes to be tested. And if you notice, we go structure to structure to structure to structure and back to structure. So anyways, hope everyone had a great day, and I'm done. I'll see y'all later. How do we kill this?